Hi, I'm Raes from LongPoint ETFs. Welcome to our next video on trading crude oil future ETFs. Built for high conviction traders with short-term views, our ETFs offer either 2 times up or 2 times down exposure to crude oil futures. CLUP for long, CLDN for down. Once again, for trading, you should be looking for pricing surprises either up or down, and then positioning yourself around that using our ETFs. Just like last week, the news is all doom and gloom with US tariffs. Now we're talking about President Trump's Liberation Day and the impact on the Dirty 15 trading partners. And of course, that's all coupled with those trading partners coming back and rattling their sabers with the potential counter tariffs that they're contemplating at the same time. All in all, a lot of negative news out there. As well, on the negative side, we saw crude oil inventories pop this week, up by about 6 million barrels US. This, of course, is still below the 5-year average, however trending up, which can be viewed as a negative sign on oil. So amidst all this doom and gloom, why has crude oil rebounded this week? It's up to about $72 US per barrel. Quite simply, it's all about geopolitics. We've got reports coming out that Iran is considering a missile strike against Israel. Of course, this would be a big impact on supply and cause a lot of uncertainty in the Middle East. Any further escalations of war and conflict here certainly bring a lot of uncertainty to the oil market, and they were reflected in rising prices this week. Keep in mind the potential for lots of surprises with crude oil pricing when it comes to geopolitics, as we've got a lot going on with President Trump, including the Middle East, Russia, Ukraine, and even elsewhere. Any extra surprises will cause a lot of volatility in the crude oil market. Positioning around that, either long or short, is an interesting opportunity to best position in your portfolio. Thanks for watching. Please check in next week for more updates, and head over to our website, longpointetfs.com, to have a look at the ETFs and review our blog.